Hi everyone, welcome to another honeystocks.com weekend analysis, and this one's going to be going out on the 2nd of April 2022. Now, before I do the usual and of course switch over to my screen share, as always, my email inbox, lots of emails after the analysis that I've been putting out over the last couple of weeks. So I have some chart updates, some broader market analysis. I've been asked to cover the inverted yield curve and what that means ultimately for the market, some data, and of course, as always, I think around 10 charts this week that I think you could probably add to your radar for the forthcoming couple of weeks. This will be my last video for a while for social media. I'm taking a 2-week vacation, and of course, many of you know that I'm super busy now, so I don't have the time that I once did. But I hope you get some value from this, and let me know in the comments what you think, if you'd like me to do more of them in future. Let's dive into the charts. Now, as always, before I get into the charts, please pause the video, make sure you're comfortable with that before watching any further. Basically says there's not any investment advice. Please do your own due diligence and don't be silly. To give myself just a little bit of credibility, I'm working my way towards my CMT. Technical analysis is something that I'm widely known for in professional circles. In this game, I understand fully that it's all about what have you done for me lately. 2 weeks ago, I put out these charts to social media. This is a performance of those charts over the last couple of weeks. Shopify is a bit of an anomaly. In my view, it's not down 11% in the last 2 weeks. There was a little bit of shenanigans literally 30 seconds before the close last week, and it gapped up and then it gapped down on the Monday morning. So I think most of the charts have done pretty well, but hopefully that can demonstrate a little bit that I can identify uptrends, good stocks to buy. I understand when to get defensive. For those of you that follow me on social media, you'll know that back in November, I made a big call on the failed breakout in the small caps, which ultimately led the whole market lower at the start of the year, highlighting the potential for a valuation reset. The S&P 500, again, back in the 5th of January, highlighting exactly the same thing as what I've seen in the small caps. So again, it's enabled many of our clients and members to get defensive ahead of a lot of the carnage that we've had over the last few months. And if you want to go a little bit further back on my website, you can see how I got ahead of the crash in 2020. As most of you know, I do not use the magical hindsight indicator. All of the analysis that I provide is all in real time, and the analysis in this particular video is the analysis that was provided to our clients 10 days before the crash. So if you are in the process of learning technical analysis, how to read the market, etc., there's a lot of valuable insight to be had from that one. But as always, hit that like button, hit subscribe, let me know what stocks are on your radar, and let's dive into the charts. So I think probably the first place I want to start is with seasonality. As we're coming into the month of April, there's a few months of the year that I like to pay attention to. I think March and April are clearly two top performers. September, you'd have to be silly not to consider the September effect. But this is the S&P performance dating back over the last 70 years. And as we can see, April is historically a strong performer. Now, I take the seasonality charts with a little pinch of salt. I understand that, on any given year, the market can tank or it can rally massively. There's no real way to tell. But when we look at the probabilities within the data, we can say reasonably that April is a decent month. So let's hope for a decent April. The other side of it is, and many of you reached out on social media this week, many of you reached out via email, because a lot of you seen I made a post about the yield curve. Now, first thing to say before I just quickly get into this chart is I'm not an economist. I couldn't think of anything worse. But when we have the inverted yield curve, I understand how to interpret the data within the chart. If you are looking for a concise explanation, I would recommend going to this article here on Investopedia. It's very, very insightful, and it will provide all the information. There's no real way to simplify what the yield curve is, but I do have the chart for it. And essentially what happens when the yield curve inverts, which it drops below zero. Now, this week we have dropped below zero. I'm still waiting on an update from Optima, who is my charting provider, but we have touched this red line. Now, historically, when the yield curve inverts, we've got here 6 instances where the yield curve, the date that it inverted, which means it dropped below zero, and then when the recession begins. So typically, as we can see, it's on average 12 months before we get to an actual recession. Now, of course, we know that we hit a recession with the market crash in 2020. That was a 6-month period. We had a 6-month period in July 1990 as well. So on average, it's around 12 months. So I think what I would like to communicate with the inverted yield curve, yes, you would have to be an idiot not to give it some consideration. But is it something that we immediately need to be concerned about? I would argue no. Now, what does the inverted yield curve and how does that play out with the broader market? Now, I've highlighted on the S&P 500 chart the instances where the recession has begun. And as we can see, it's not pretty reading for the S&P 500. Now, what I would say is before every major correction, crash, etc., there's generally warning signals to be had that flash within technical analysis. Now, the advantage that I believe retail traders have, which is you and I, over the big money institutions, is we are not managing tens of billions of dollars. So for you and I, we can exit the market as soon as we start to see the selling kick in. The problems arise is because the big money institutions, they have to put in their sell orders and they have to scale it out over a period of time. Whereas you and I can hit our interactive brokers account, sell the position, and we're out. So that's possibly, in my view, the advantage that we have. So I am not personally going to start weighting my portfolio or overthinking the inverted yield curve in any way, shape or form. For me, it's business as usual. We are identifying stocks, risk to reward propositions, and ultimately looking to profit in the market. I'm not going to be exiting the market just because we've got an inverted yield curve, and I hope that makes sense why. Now, I touched on this chart last week, which is the Russell 2000, and why I believe it's the most important chart in finance at the moment. Now, the Russell 2000 is a good gauge of market risk appetite. Now, what we're seeing here, now I've switched this, a lot of you will be familiar with my work. I use candlesticks most of the time. With the Russell 2000 chart, the line chart just makes it cleaner and easier to understand. Ultimately, what we're doing here is we're just pushing up against a key level in the market in the Russell 2000. Now, if the Russell 2000 can catch a bid and rally higher and put in a failed breakdown, and with failed moves, we oftentimes get fast moves going in the opposite direction. So I'm looking for the Russell 2000 to get into the kind of 214 area. Hopefully we can see that next week. We can see this week there has been a little bit of a rejection. My concerns are that this rejection just, takes the market lower and, we stay within this sideways range. But for those of you that were observing the market on Friday, just before the close, you'll know that the market pressed the buy button and rallied going into the close. So I'm quite optimistic. That's generally a good tell on what we can expect early next week. We've got the S&P 500 now. I know that many of you follow my work on social media and my YouTube videos and stuff like that. You'll know that I made a call a few weeks ago to maybe consider starting to buy the market purely based on support levels in the S&P 500, the Dow exactly the same. The triple Qs as well, we're reaching a level of oversold where we can reasonably expect a bounce, and ultimately that has all played out pretty well so far. Hopefully you've all done pretty well over the last few weeks. I have done my best, especially with my weekly letter and of course my sporadic random social media videos. So hopefully you've done pretty well from a lot of my work over the last couple of months. Now, I'm going to be getting into some individual names that I think warrant consideration. Some of the charts that I have prepared this week are charts that I've communicated to our clients and members. I've got some of our premium charts that are looking like they're going to break out, and there's many interesting names. So as always, I'd suggest just picking out the names that you like. The stocks are generally strong fundamentally as well. That's maybe the other thing to say. But we've got the copper miners. Now I touched on the copper miners last week. Now we have gone out at another closing weekly high. So if the copper miners and copper can get a move, you all know by now that I put out an alert, a high conviction alert for our clients 2 weeks ago on this. It is starting to move a little bit. I think it's up 8-9% in the last couple of weeks. But ultimately on it, Freeport McMoran, I have a target there of around $72. Exactly the same with Eagle Bulk Shipping. Again, we're looking at low PE ratios. We're looking at massive earnings growth. This again, just for disclosure, this was an alert went out to our clients at 56. The chart has changed a little bit since then. I'm looking at this as an ascending triangle pattern, and I think if there's a confirmed breakout next week, then Eagle Bulk Shipping could potentially take the next leg higher. I posted this chart to Twitter earlier on today. What I do like to look for is beaten up names, and I think with beaten up names, I'm looking for historic support levels. I'm looking generally for bullish divergence. Although bullish divergence in of itself is not the be all and end all for making a decision on calling a bottom, if we have the double, let's call it a double whammy. I don't know if any of you have seen Anchorman, but certainly if we've got a strong support level and we've got bullish divergence, it's very, very easy to define the risk. Now, this wouldn't be something, an investing mindset. This would be perhaps a swing trade type move. A lot of my work is geared towards long-term investing. It's geared towards swing trading. But what it's not geared towards is day trading, or if you're into, slinging weekly options, for example. My time horizon is generally weeks to months. And I think with Home Depot, I think if the $300 level here, which acts as support, can hold, then it's probably offering a decent risk to reward proposition. Of course, all bets are off if it breaks to the downside. I wouldn't be looking to take any chances. If you just have a look at, a lot of what the home builders are doing at the moment, a lot of them are being absolutely decimated. And the concern would be that a lot of those areas of the market continue to move lower. And because Home Depot is such a big weighting within the home builders ETFs, the concern would be that Home Depot continues to crater lower, which nobody really wants if you're an owner of Home Depot. So I think there's a risk to reward proposition, but ultimately I would cap the downside, and if it breaks lower, no chances taken. We've got Hewlett Packard Enterprises, HPE. For those of you that like your chart patterns, although of course this week it did fall away again, but I think it's worth adding to the watch list in case it breaks up above $18. You just need to look at that massive earnings growth, and again it ticks a lot of the fundamental boxes that I have. We had a big breakout in the last couple of weeks in Palo Alto. So ultimately the hope is that will continue to move higher. We've got Boston Scientific. We're looking at an 18-year base. If Boston Scientific can get above $47, that one could potentially get off to the races. Antero Resources, for those of you again that have followed my work over the last couple of years, you'll know that I highlighted this breakout way back at $5. It's been in a beautiful 40-week SMA uptrend ever since then. You can substitute the 40-week SMA with the 200-day simple moving average, and yeah, it just keeps going. But I wanted to highlight it this week for social media because it is now pushing up against a key historic level. For those of you that don't understand the concept of looking left on a chart, it just means when you look left, you're identifying the potential areas of resistance, and for me this looks to be a pretty significant level for Antero Resources. If Antero Resources can break out higher, then I think there's another 50% upside to its next pivot level. We have Zoom Video. I made a bottom call on this a few weeks ago, as some of you will know. It done incredibly well. Now, the caveat to picking up any bottoms, in my opinion, if you are looking to actively manage the position, you have to be aware of things like declining 50-day simple moving averages. Yes, it was off and running, moved to 20%, but then it has ran into the 50-day. So I think for me, if Zoom is going to, put in a definitive bottom, and please understand, I'm not for 1 second saying that it's going to get back to its previous all-time highs. I doubt it very much ever will. But if you are looking at it purely, as a rebound type trade, or even an investment, you can apply things like trailing stop losses to give your position room to breathe. So I think Zoom might tick a lot of boxes if it can get above its 50-day simple moving average. Again, another big breakout here in Blackstone Minerals. I covered this one a few weeks ago for our clients. It's obviously in the oil and gas, very, very similar to Antero Resources. I think the whole Ukraine-Russia conflict is driving a lot of those positions, so that one could be appealing. We've got Lithium Americas. Again, it's had a massive move over the last couple of weeks. We're looking at a target here of $42. However, I think given the momentum that seems to be in a lot of the lithium names at the moment, I think it's reasonable to look for another breakout above $42. AbbVie, I like above 165. Again, it's just met our target from a premium chart back in January. So I think if it can get above 165, there would be a logical target for me. The Fibonacci levels, I get it. Many of you, I guess, watching this just won't understand. I don't understand why the market reacts to these levels. The market just does. And so I like to factor in Fibonacci to some of the charts where it makes sense. And for me, if AbbVie can get above 165, it's logical that it starts moving towards the next Fibonacci level. I made a bottom call. This is one of the charts from my sector chart book, which is available to our clients and members any day of the week. I made a bottom call here on biotechs. I posted the chart to Twitter also. So I think it makes a lot of sense. I think if biotechs are going to bottom, this is a logical place for it to happen. That said, just like what I was saying, regarding a couple of the charts previously, you would probably want to just be aware of levels where the thesis maybe does start to get called into question. So it's about managing risk when you're picking up bottoms and you're making bottom calls. If the stock moves 5-10% in your favor, de-risk the position. What de-risking the position essentially is just putting a stop loss on just above your entry position, and it just protects the downside. Now, of course, it doesn't protect you against a gap down, which is that's the fear with any chart or any trade, I guess. But I think with biotechs, I think it makes some sense at the moment. United States Steel just continues to move much higher. It's had a monster. I mean, that's since the end of January. It's had a massive 87% move, and the look of this, it's got a ridiculously low PE. It's got massive earnings growth. This could go much higher. Yes, it's going to have to deal with pullbacks along the way, but I think United States Steel, I think, might make a lot of sense. We've got Ethereum again pushing up against its 200-day simple moving average. For me, I'm viewing this as a bit of a base. Now, for me, just to get it out there, I don't actually trade cryptocurrencies. I have a set allocation, and I dollar cost average on the blue chip names, the likes of Bitcoin, Ethereum, Solana, etc. So I think for me, I'm looking at this. If we can get a breakout, hopefully this weekend, hopefully we start to close the gap on the final 40% that it has to go to reach its previous all-time highs. We've got Luna again chopping about, threatening to break out. It did put in a breakout bar over the last few days. It has pulled back a little bit, but hopefully that's just consolidation before taking the next leg higher. Again, Shopify, I made a bottom call on this one a few weeks ago. Very similar chart to Zoom, where it has ran into the 50-day simple moving average. But I think if it can get a further breakout above the 50-day simple moving average, that might be an opportunity to compound into the position, add more position size, and it's very easy to manage the risk from there as well, where you can just use the 50-day simple moving average perhaps as a stop loss placement, for example. Nvidia, lots of questions on this one. Again, got a target of 350 here. Now, this is the 50-week simple moving average. As we can see, historically, it has been a massive support level for the stock. Got lots of questions on why I made a call on Nvidia a few weeks ago. This is the reason why. Just need to use basic technical analysis. There's nothing complicated about this. It just tells me where we might find some buyers, and of course buyers stepped in where they should have stepped in. We've got Boeing. I think with Boeing, I think it makes a lot of sense to just kind of hold fire a little bit. I think we're looking at a very significant level of resistance. However, if the trend is going to change, I suspect earnings season is going to be the catalyst for Boeing. So if Boeing can get above this trend line, somewhere in the region of 210, 215, then that one could get off and running. Big support level in place for AMD. We're looking at AMD at $100. I think at $100 it probably offers opportunity. It was downgraded this week from one of the investment banks. I think it was down, 7-8% or something. But I think if it even gets as low as 100, I think if the market is going to rally Monday, Tuesday next week, there's a chance that AMD is probably bottoming. So obviously great company. So we'll see what happens there. Golar LNG, I don't know how to pronounce that. I actually posted this one to social media as well, and somebody reached out this week asking what to do with it. Now, I don't tell anybody how to manage their positions. I just, provide tools and, technical analysis insight. But what I would say is, if you're out there and you have bought in around the 15, even, $18. I think with the letter I put out to social media a few weeks ago, this was one of the charts in there, and I think it's ripped 30-40% or something. But I think you just have to stay with the trend for as long as it's moving. Now, I like I said, I like to use trailing stop losses with very defined parameters that I believe the market respects. So a lot of the time, what you'll find with a lot of my charts is they pull back to these levels before rebounding. That's not a coincidence. This is by design for my process. There is no perfect process. There's only a process that will enable you to get in and obviously manage your position. So if you are somebody that got in quite low here on this breakout, you use your trailing stop loss, or you pick a level and you just say, thanks very much, Mr. Market, take your profits, move on to something else. And we've also got ARC. I think with ARC, again, I made another bottom call in this one. It's above its $61 level. It did break out above its 50-day simple moving average. It has pulled back. But I think if ARC is going to make a move higher, I think you probably have to see the small caps, which is the IWM. You probably want to see the small caps break out of the levels that I highlighted earlier on in the presentation. And I think you can probably expect ARC to potentially start to move higher again. So hopefully you've got some insight from my analysis. If you are somebody that perhaps struggles a little bit with the markets, with technical analysis, reading the market, whatever your deal is, feel free to stick around for a minute. But don't forget to hit the like button and let me know what stocks are on your radar. But if you are maybe new to my work, or you've stumbled across my work on social media, feel free to go and check out my website at honeystocks.com. Provide professional charting research. Every single week I provide premium analysis to our clients and our members every single Saturday without fail. Provide our midweek halftime analysis, which is a 5-minute analysis, just going over the broader market and a few additional investment trade ideas. I'll show you what our trade ideas or high conviction alerts look like in just a second. Also provide access to a wonderful trading community, lots of investors, traders from all over the world, and full of just really nice folks as well, very educated, very smart, very professional setup that I have. I've seen people do Discords and WhatsApp groups, and it's a lot of nonsense. I've got a very professional setup with Workplace. I use an app as well, so feel free to check that out. We've got charting support every single day. I provide charting support to all our clients and members. And if you're in the process of learning about technical analysis, I also provide full access to my technical analysis program, which I'm told is very, very good. So this is what we're doing at the moment. I have extended this by a week just because of the rush for it this week. A lot of my work has been featured in the chart report this week, and of course that has had a lot of inquiries and sign-ups, etc. So I've extended this one until Monday. So there's 20% off all our memberships, and it's checkout code SPRING. But this is what our trade high conviction alerts look like. This is a recent alert that went out for Shopify. As you can see, very clear parameters in place. We've got Freeport McMoran again. That's another one that went out. Lithium Americas went out above 29. Got Cloudflare was absolutely massive last year. I think you could go and have a look and see what that chart did. Square Inc. again met target last year. Zscaler was massive. Antero Resources, I talked about this one earlier, I think, just highlighting that I've been covering this one for our members and clients for the last couple of years, and just keeps going. But I'm very, very unique in what I do. I log every single trade idea that has ever went out to our clients and members over the last few years. I have a quality over quantity approach. I'm not putting out high conviction alerts every single day. It's generally one, maybe two in a week. It just works that way. Don't ask me why. It's just better to have it that way. So please check if you are thinking about signing up for my services. Make sure that the types of stocks that I like to recommend are the types of stocks that you like to buy. I don't put out penny stocks. I'm not putting out pump and dumps or any of that nonsense. It's all high quality names, strong companies, and of course strong charts. But I think if you are someone that is looking to maybe get away from day trading, I think we might be a good fit. I think if you have a mid-term approach, if you're looking to learn technical analysis, maybe you're just too busy with work, life, family, etc. to keep on top of the market, I guess, like us professionals do. Or maybe you just like to be part of a community and you're sick of hunting around social media. I think we're probably a good fit for many of you. So feel free to go and check out our website, do all your due diligence, and as always, I hope you got some value from this. Whatever you're up to, enjoy your weekend. We've got also some of our testimonials, so feel free to check those out as well. Lots of members that want to stay with me for life. So yeah, enjoy your weekend. Appreciate you watching.